Hello folks, welcome back to the Edupedia world, and I am Abhinay Gupta, and we are continuing with the standards in auditing, right? And the basic standard under consideration for today's lecture will be a continuation of the standard that we took up in the previous lecture but could not complete it in that lecture due to the time constraint, right? So which is SA 580, the written representation, right? And always remember, when we are discussing this standard and whenever we refer to the management who is to provide the written representation, we will always consider those charged with governance in relevant matters as well. So I will not always specify that yes, we'll take it from the management or those charged with governance in the relevant matter or with the relevant responsibility. No, I will always say management, and you will have to understand that okay, management would automatically include those charged with governance, right? So in the previous lecture we have seen and defined the scope and objective, right? You can see the three objectives and the scope on the screen. Then we had also discussed about the definition of written representation, right? And why does this definition become very important for you, right? Normally what students do is when you refer any book for any matter, the normally books that are available in the market for your reference from various teachers and various authors, you generally do not find definitions in that book. You'll find the scope, you'll find the objective, you'll find the effective date, and then the entire essay divided into various flow charts and a lot of things. But definition, I don't know why people fail to print it in their books. Whereas definition is one of the most important thing again. I'm not telling you it's an important thing because it gives you a concept. No. It helps you in your examination. No. It is not very important to write the definition in the examination, but a smart student would do that. Why? Because it saves you from a lot of explanation that you would otherwise be giving. A 2-paragraph of explanation that would take more than half a page. Because you have time constraint in the examination. So we discussed about the logic of using definition in the previous lecture. So you can even refer back to that. And then we started with the requirement portion. So scope, objective, all of them are done. And then we come to the requirement section. And we have already discussed 4 requirements. Basically 1 requirement into the management's responsibility and 4 parts of that requirement, right? What were the parts that we have discussed already? It is the preparation of the financial statement, the responsibility of management, information provided to the auditor, all the information whatever he needs to be provided to the auditor, and all the transactions that have been recorded and that have been used for preparing the financial statement should be complete. Right? And the description of the management's responsibility should be a part of the written representation, and that will be in accordance with the engagement letter that you have already signed. And then the other written representation that would actually be helpful for you to support your other evidences. Right? So we have already discussed these topics in detail in the previous lecture. So if someone of you have missed it, please go back, refer to it, because this lecture is a continuation. So don't break the flow. Right? Because there are some things that would go as a bouncer because I would be referring to what we have discussed in the previous lecture. Right? So now we move ahead and discuss our topic for the day. So again, in the same topic about the requirement after the management's responsibility, a very important thing is to note the date and the period which is covered by the written representation. Right? Now, first thing that you need to understand when we are dealing with written representation is that a written representation from the management or the TCWG, whosoever concerned, is an audit evidence. Although it is not a conclusive audit evidence, but still it is an audit evidence, right? You cannot deny the fact. You will have to document it, you have to attach it, you have a lot of things to be supported by a written representation from the management, right? So always understand that the auditor, if you are an auditor, you go for an audit of a client, do you issue the report before taking the evidences, before checking and before doing all your work? No. Issuing the report is the last thing to do. When everything is done, you have reformatted the entire financial statement, whatever was the misstatement, you have helped them correct it, you have recognized what was the truth behind it, any updation and everything has been done, all the checkings, all the documents have been prepared, all the assertions have been tested, the notes to accounts have been prepared very well, all the formalities, all the procedures have been done, and then you prepare a report and you decide whether you need to give a qualification, you need to give an adverse report, a disclaimer report, if you want to emphasize on the matter paragraph, other matter paragraph, whatsoever it is. but always remember that audit report is the last thing. So the written representation should always be provided to you before issuing the audit report, because you will base your opinion on that written representation as well. Why? Because it is an audit evidence. Okay. Now there is one more thing to understand along with this, like in the same parallels, which is, okay, we know that the written representation cannot be given to the auditor after the date of the report. Why? Because the report will be based on the written representation. Now, what is the most appropriate time when the written representation should be given? Is it at the start of the audit, during the audit, at the end of the audit, close to the report? What should be the most appropriate date? I'm not asking you anything from the text, just from your common sense, from your understanding, what should you do? Some of you must be thinking that, okay, as soon as we go, the management should give all the written representation. This is the fact in the company. This is what we have done. This is our responsibility. This is everything. Now please start the audit. That never happens. Although they will give their responsibility statement and some other facts, some other written representation in the beginning of the audit, no problem with that. But others that you need to support your evidences, they will be given to you as and when your procedures are being confirmed. Right? When you have already performed a procedure, you have some evidences gathered and you need a supporting of that evidence, you will call for a written representation. So again, we have seen certain written representation in the beginning of the audit, certain during audit. But again, is that the most appropriate thing to do? Obviously, when you are performing the task, you need a written representation. But the main written representation on which you will base your opinion would be the written representation that you get closer to your audit report. You have all studied about Accounting Standard 4, right? That deals with the subsequent period. Right? And then when you need to update your financial statements, when you do not need to update it, if it is an event which is confirming its occurrence on the balance sheet date, you update it, otherwise you do not. And then what do you have to include, director's report and everything. All those things are covered in accounting standards. Right? I'm not going to deal in detail about those aspects, but you know that yes, even a subsequent event are very important. So suppose a management has given you a written representation prior to the audit report, right? After the audit has started, after the financials have been prepared, but then there are subsequent adjustments. So don't you think a written representation which is very close to the audit report will be the most appropriate written representation? Because that would even cover the subsequent period transactions, the events, the transactions that have taken place in the subsequent period. That means after your balance sheet date and before the auditor's report. Right? If you go by the standard, the SA 560, then you would even go beyond that. Right? Up to they are presented to the shareholders and everything, but let it be, that's a separate story. But when you are issuing the report, your written representation should be just before that, as close as possible. That is the best time, because if there is any amendment, if the management thinks that they have given a written representation but they need to update it now, they can do it. There's no problem with that. Right? What you do is you update the written representation. Okay, this was given beforehand, discard it. New written representation attached to the work papers, and the work is done. And that would be the written representation on which you can depend for forming an opinion, for formulating your report. Right? Now, this is almost everything that you needed to know about this. But again, if we talk from the examination point of view, we are always scared of the questions that you get, because it is always a case study based question. So let me give you a case. When we're talking about written representation, right, one thing, a golden rule you need to remember is that a written representation would be required for all the period concerned under audit. And when we're talking about all the period, even the prior period is a part of audit. You have to report on the prior period. Even your Accounting Standard 5 deals with the prior period item. Right? So if there is something that is coming from the prior period and something, for example, if a management had given you a written representation in the previous year while you were auditing for the previous time, and now the fact has changed. Subsequently, after the close of that year, during this current year that you are auditing for, during that year there has been some major effect due to which some of the written representation given by the management in the previous financial year for the previous accounting period goes for a toss. Now what do? Now it is the management's responsibility again that they respond. They will inform you that okay, the written representation given in the prior audit was not appropriate and this is the update. So even that has to be given. So even this is the responsibility. Why? Because written representation would actually cover the entire audit. And when we talk about the audit procedures, prior period become an integral part of it. Now again, there's a case that the management changed. Previous year there was somebody else heading the department. There was some top level management people who left the management during this year, maybe for any issue. That is none of your concern. But now you know that there are new personas on the management head. And they say, sorry boss, we were not there. I don't know what happened in the previous year. I won't be able to give anything. What do? You will still take a written representation and you will ask them to write that you will not be able to give anything because of this reason. That is your responsibility. This standard is talking about your responsibility as an auditor. So if you have to take a written representation for anything, you will have to take it. If they are not sure about something or if they don't have any knowledge about that thing, let them specify the same thing in the written representation. At least you will have the document. Next day if somebody is reviewing it and they tell you that listen boss, there are some discrepancies over here, do you have a written representation? Does the management confirm these assertions? And you say no, actually the management changed and the management cannot give anything. So who knows? How do you prove it? You will have to have the written representation to prove that yes, management did not do anything. Otherwise, what will the reviewer think? He'll say no, you did not confirm this task. Remember, review is a very important part of the audit. Even when I used to audit when I was in the Big Four, even that time the audit procedure with the client, those periods are very simple, right? You go over there, you apply your analytics, you apply your logics, you apply your brain, you apply your learning and training, and you are able to perform the audit. But when it comes to review, right, those managers, senior managers, partners, they are brilliant people, right? They pinpoint each thing that yeah, this is what could go wrong, and they'll catch it, and you will realize, oh, we missed out this thing, right? So all these things, whatever the standard says, you have to do it. They'll know that okay, you haven't taken written representation for this thing because it is not important. They could not say anything, leave it, but you have to take it. That is the responsibility given by the standard, right? So that is the date and period covered by the written representation. That is the concept behind. What is the date? As close as to the audit report and before the audit report, not after that. And the period would be all the relevant period that needs to be covered, specifically all the periods that you refer in your auditor's report. Next requirement we have is about the form of the written representation. What would be the form? So when we talk about the form of a representation letter, it is basically in the form of a representation letter. Okay, now what does that mean? That means that it is a letter which is addressed to the auditor that okay, these are the facts that we represent to be correct, or these are the facts that we represent to acknowledge, right? So it is simply a letter of acknowledgement, you can say, a letter of confirmation, a letter of responsibility, a letter of statement, right? So a written representation is a document, a letter that is addressed to the auditor that okay, these are the things that we certify or we affirm, right? That we make a representation that these are the facts. So it is a mere statement of the facts that is included in the written representation. It's a normal statement, nothing else. But at some time, some other law or regulation, they may also require the management to make a written public statement. That is not a written representation because that is not addressed to the auditor. When you talk about a written public statement, it is actually issued to the users of the financial statement. All the users of financial statement, whosoever is viewing it, it will be attached to it. It is a written public statement. It is publicly announced that these are the responsibilities or these are the issues or whatever is the content will all be given in the public written public statement, right? Now it is on the auditor. If the auditor goes through that written public statement and he thinks okay, the matters that I am asking for has already been included over there, so if they are issued for the users of financial statement, if they are issued for the public users, right, all those people who are concerned with the financial statement, then remember that even the auditor is a user of that financial statement. So we'll deem it a good compliance of SA 580 if a written public statement contains the relevant matter that the auditor wants. So the auditor will not be actually required to take a separate written representation addressed to the auditor. No. Address me and say that, okay, this is right. Address me and say this is your responsibility. No, if they have already addressed it to the public, everybody knows this is your responsibility. We don't need anything exceptional for us if the facts are the same. If there's a change, if there's a difference, please do us a formality, do us a favor, give us a written representation. But if it is exactly the same thing that you are going to write in the written representation addressed to the auditor, then please avoid. We are happy with it, right? But again, when you are considering that written public statement, there are certain matters that you need to confirm. You will see whether that written public statement actually includes the confirmation to the fulfillment of your responsibility. That means the management's responsibility. Will it contain the entire detail? Okay, these are the responsibility of the management, and is it in alliance with your engagement letter as well? Whatever responsibilities you have decided to have been vested on the management, right? Then what you see, the next thing is, who has issued this public statement? Is it the relevant authority whom you wanted to issue a written representation to you? If you are approaching Mr. X, Mr. Y and Mr. Z for a written representation, they are the in charge, they are the management, the leader, the top head, and they have themselves issued the public statement. Then you'll say, okay, I want it from you, you have issued it over there, I wanted this detail, the details are given over there. Okay, even I am from the user of financial statement, I don't want a separate statement, I don't want that priority. I'm okay with it, I'll attach that written public statement to my work papers. But again, there you will also consider whether a copy of the same written representation or the written public statement has been provided to you close to the audit report. Why has it to be provided to you close to the audit report? Because at some time they can say, we issued the written public statement in the month of March or in the month of April, beginning of April. Audit has been done in the month of June, July, right? And there are certain things that have changed after that. So who is responsible now? Now the onus comes on the auditor to accept that yes, you have been a defaulter because you did not ask for written representation. So what you do is, okay, if you have made a public statement maybe in April, give me a copy of the same, attest it and say that yes, it is the same thing, and give it to me in the month of July or in the month of June before my audit report, so that you are confirming even on this day. The date and the signature over there is important because the management will be confirming even on that day that all the facts in that written public statement is correct. Otherwise, you take a separate written representation if there is a change, right? So that will be the form of written representation. So when we talk about the doubt and reliability of the written representation, right, the first thing that we need to check is, how do we have that doubt? Is the written representation not confirming with the other audit evidences? Like, we have gathered so many audit evidences during our procedure, right? But there are some written representations, one or more written representation, which are inconsistent with any audit evidence that we have obtained from a different source. That means the management is saying XYZ, and the other source, the evidences that we have gathered from the other source, talks about ABC. So it is a difference, it is inconsistent with each other, right? In this situation, you will have to assess whether the risk assessment that you have already performed is appropriate. When you were checking your ROMM, whether that checking was appropriate. Why? Because there is inconsistency. You cannot directly say that the management is not correct or the written representation is wrong. Maybe the written representation is correct, but your audit evidences are wrong. You never know, because you have gathered one evidence from some other source and one evidence from the management, and you are comparing them, right? That is one of the major tasks of taking a written representation. That is confirming the other audit evidences, right? We have seen it in the first lecture, in the previous lecture, that a written representation basically fulfills the task of confirming the other audit evidences. So if there is an inconsistency, you cannot directly conclude that the written representation is incorrect. Then you will have to check whether your risk assessment procedures were correct, whether you have been able to assess risk appropriately, whether the evidences that you have gathered are also correct. Is there anything to modify? Is there anything to work upon further? You will have to check it. So you may have to even revise your assessment the risk assessment, right? And you'll have to redefine your nature, time, and extent, and then perform some other procedures, and then gather the evidences. And again, if it is inconsistency, well and good. If no, then you can also doubt on the management. It is not necessary that your evidences are wrong. If you conclude that your risk assessment procedures are very appropriate and the evidence that you have gathered from a different source is close to being a conclusive evidence, evidences are not conclusive, it is persuasive, but still it is close to it, and you are sure about your evidences, then you can doubt on the reliability on the written representation given by the management, and then you can take further steps on it, and you can see the impact of that on your report. Right now, suppose if you have a doubt on the competence, integrity, diligence, ethical values, remember ethical values? I have been repeating it over and over in the class. I'll repeat it again. When we talk about ethical values, you have IOPCP: integrity, objectivity, professional behavior. C is for confidentiality, and the other P is for professional competence and due care. So if you have a doubt, right, if you are not sure about the ethical values, the integrity, the diligence of the management, right, then that becomes a very, very, very severe task. Because if you think that integrity in the management is missing, they are trying to defraud you, they are trying to misappropriate the assets, they are trying to play with the financial statement, they are having some fraudulent intent, right? And if you think that it is pervasive, or if you understand that the management is not committed towards giving a fair disclosure, then that may even cause you to conclude that you cannot audit this financial statement. When you feel that the risk of the misrepresentation by the management is so huge that you are not sure about the financial statement, you are not sure about the assertions, you're not sure about anything, and you know that, okay, in this situation I will not be able to conclude the audit. And if something like that occurs and you doubt as to the reliability of the written representation, then you may also withdraw from that audit. You may have to think that, okay, now it's time, please see if it is possible for you to withdraw. Unless and until the people, those charged with governance, they take the charge, the audit committee or whosoever it is, they take the charge and they rectify it, right? But at any point of time, it will not be rectified to such an extent that you do not issue a qualified report. Issuance of an unmodified report at that situation is very difficult, because you will have to give some other qualification, because the integrity of the management is not appropriate. You cannot have a trust, you cannot have a confidence on that financial statement, right? So basically we see two aspects when we talk about the doubt as to the reliability of the representation, written representation. First, compare it with the other audit evidences and check if it is inconsistent, then which one is wrong. You may apply further procedures for that. Second, if you doubt on the integrity, the entire ethical part, the diligence, right, of the management, then again you need to consider that, that there is a chance of fraud occurring in the financial statement, or you cannot rely on the financial statement. You will try to withdraw. If those charged with governance, they rectify the issues and they are able to take charge and bring the financial statement to such a position that you think, okay, it's auditable now you can provide an opinion on that, you will again continue. But in that situation it becomes difficult not to give an unmodified opinion, or sorry, difficult to give an unmodified opinion, right? You will determine whatever is the impact on your opinion in the report that you are issuing, and if there is something which is very severe, you may also issue a disclaimer of opinion. Okay with that? Next and the last you check is requested written representation not provided. In the beginning, you wanted management to provide a written representation relating to the responsibilities of the management. You wanted them to listen, I want you to please let me know whether you have fulfilled your responsibilities very well. And suppose the management did not provide anything. You say, listen, we had an engagement, in the letter you have signed that these are your responsibilities, give me a representation letter that you have fulfilled your responsibility. Management is silent. You gathered some audit evidences, you went to the management, I want a written representation on that, what are your views, what do you think? What do you have to say on that? Management remains silent. You are preparing your audit report, it is close to that period, subsequent period has gone, there are certain major changes taking place. You approach the management. Is there any inconsistency? Is there any change? Please give me written representation. Management is again silent. Then what do you do in such situation? First of all, you will discuss the matter with the management. Listen, boss, you had to give us certain representations. We had requested you earlier over the mail or whatever procedure you followed, but we haven't received anything in return. So are you intended to give something to us? Will you be giving us something? And you don't know what has happened. So what you do is you try to re-evaluate the reliability and the integrity of the management. Whether the ethical issues, whether there is any ethical issues, maybe they are not competent to give a written representation, maybe they don't know anything, maybe there's a fraud they want to hide, there can be anything, maybe they're not interested, they're just ignoring it, neglecting it, they're taking it very lightly. You'll have to judge it, and then you will have to take an appropriate action onto your opinion. You'll have to see what is the effect that you will have on your opinion, on your conclusion, on the report that you issue. Right? And under such circumstances, if things are going so weird and so wrong, then you as an auditor should issue a disclaimer opinion that I did not get these things, so I am not able to comment on these issues, and hence it is a disclaimer opinion. I disclaim I will not talk about this because I was not provided with the information, I was not provided with the records, I was not provided with the access, no management representation, nothing. So I disclaim my opinion on this report. That should be your opinion, that should be your report. Now that is all about the standard that we had to discuss. There's nothing more. The standard comes to an end over here. Right? Initially there was also one more inclusion, that a line which says that this standard is specifically applicable on the public sector entities as well, but that has been deleted now, right? Because if you refer to your SQC, the quality control standard and everything, and if you refer to the preface, then it says that the standards are equally applicable on all the entities, right? So a requirement to display that yes, it is specifically applicable on public sector enterprises was not required. So that was deleted. So all you need to understand by that deletion is that all the essays, specifically this one also, is applicable on all entities. Whatever entity is it, you're going for auditing, take the management representation letter. As an auditor, it is your responsibility. And if you again go through this standard, always remember that this standard is talking from your point of view. As an auditor, it is your point of view. What are your responsibilities relating to the written representation? Management will obviously mention in the written representation what is their responsibility, but the standard talks about your responsibility, that you will take it. Right? Remember the case that we discussed? Previous year there was a different management, this year it's a different management, and they say we don't know anything about the previous year, so how can we give you a representation on that? And you say okay, it's fine. No. The standard says it's your responsibility to take a representation of the prior period as well, so you will have to take a representation, no matter what is the content of that representation. Your responsibility in the first end is take it. What will you take? Management will say, what management is saying, let them write it. Why? Because when they write and give you something, they take it more seriously. Right? They rigorously check it and see whether or not they are confirming the right thing. Orally they can say and they can deny at any point of time, but when they have to document something, when they have to write and sign something, they will always be conscious about it. That is why we take a written representation and not an oral representation. Nobody will trust an oral representation. You can anytime cook up a story, yeah, he said this. And you can never fix a responsibility in the management, hey, you said this. Right? So that is an issue that comes up. That is why we don't talk about the oral representation, we talk about the written form of representation. Clear with it? So that is all about this standard. And as we thought in the previous lecture that yes, we will come up with some other standard, we'll start some other standard in this lecture as well, but I think we don't have a lot of time to start and give you a base of any standard, so we'll take up the next standard, a new standard, in the new lecture. So until then, this will be enough for you. Keep this, revise it, learn it up. This is also an important essay. Although very short, it has no much content in it, right? You have to just mug up those things that I have displayed on the screen. These are things you need to know: the scope, the 3 objectives, Definition obviously you have to learn, but if you don't learn, no problem. If you are okay to write hell lot of things in the examination, write it. I don't have an issue with that. But if you want to cut short your writing, go with the definition. And in the requirement part, you have to know what is the management responsibility, preparation of the financial statement, information provided and completeness of the transaction, description of management's responsibility in the written representation and the other written representation. And after that, you need to know that the date, what is the date that should be covered by the written representation, what should be the form of the written representation, the doubt as to the reliability of the written representation, and the requested written representation not provided, what will be your action in those situations. Right? So let that be all for the day. Stay tuned for the next class. We'll take up a new lecture in the new class. So until then, this is Abhinay Gupta signing off. Thank you and bye-bye.